Uh, Thank you very much for jumping on the podcast with me. I'm really looking forward to this because I think me as a person, even though I'm 8 years, almost 10 years in the fintech and banking, I still have this gap between like or about the crypto banking, neo banking, stable coins, etc. So I'm super pumped to discuss this. What we will, I have like these sections about the cards, neo banking, stablecoins, etc. that I would like to discuss with you. And but first thing that I'm interested about to learn a little bit more about you. So you worked in aerospace, right? But now you're building a crypto neobanks. Tell me more
Yes.
about it. How is this?
So yeah, I mean, I'm really excited to join this podcast. Really happy to talk on the neobanking world right now, as you know. But I know before that journey really kicked in, I was indeed in the engineering. So what I was really inside of the aluminium industry that was producing aluminum rolled products for aircrafts and those wing skins. And it taught me a lot of things about the manufacturing and processes, but also the people and real people behind every machine that fly out there. And if you ask me, like, after all those years in engineering aerospace, I still have no bloody clue how this thing flies, right? So it's just A380, for instance, is just massive behemoth, right? Flying there, touching up, it's just magic.
That's actually good. I was a little bit afraid that you will tell me since that time I don't fly anymore. So that's the better. That's the better.
I mean, I wouldn't tell you much. Okay, let's just leave it that way, because there are some people who are a bit of afraid of flying, and
Yeah.
let's not make them even more scared of that. But essentially, my transition into fintech was a pure coincidence. At the time, I had some friends who were starting doing something with the software business, and then some of them were in banking, and essentially it was like a more of a idea that spun out. Hey, that we want to build something new. We've had that banking background legacy. Why you would not join us, for instance, as our member, to help us with some documentation, because you're quite technical, so maybe you can help us with this technical writing, the software, and all that stuff. And at the time, it was quite a fork for me. So I could either pursue my career in aerospace engineering, which was quite a how to say, understandable and very predictable, but also I wanted to try some spicy things, right? So I wanted to kind of a challenge, right? So I wanted to have some something that would put me into position where I would not know precisely, right, what may happen next. So then I joined this some various startups inside of mobile banking apps. So, and at the time there was a very hot topic. I don't know if our audience is old enough to know that in 2007, 2008, there was iPhone that came into existence, and so all of a sudden mobile banking became a thing. So I was actually some of the part of that banking slash apps projects inside of that, to try to modernize the experience of user that they have so far, because that was mainly branch banking, telephone banking before iPhone came in. But those mobile apps were really the new era. Unfortunately, that due to various things, I wasn't a part of that team for a long time. But then, since I was already in fintech, I joined Elcoin, where our original mission was to go and pursue opportunity in B2B payments market. So we were starting off with different logistics businesses, different maritime businesses, where actual product is quite simple. So it's a payment product, essentially banking app and payments product, but that was a twist for, satisfying needs of this niche B2B businesses. And then along that way, I've come across a lot of brilliant people. I met so many interesting people, and then obviously being in fintech, nobody smiles in fintech, right? It's all kind of through that kind of endurance path. But I think this is really where my skills, the aerospace skills, are there. And I think I told you that joke before, but it's attitude, right? If you would come across and confront many developers who are doing code, and we have this new fancy vibe coding thing, right? So if you would do vibe coding with aerospace, right, nobody would fly your airplanes, right? It would be just crashing every single time. So the attitude change is different, right? And so this attitude is where the financial system is, frankly speaking, also has some detrimental impact on your life. Maybe not instant, you will not die out of it, but sometimes you need access to your money, night hours especially, or somewhere else. It's emergency, and then all of a sudden, your banking app becomes your magic stick, right? So you can kind of solve that emergency, and if it fails, it has a knock-on effect to the business, probably to your life, and obviously lives of you who are you related to it. So with this attitude, I'm now at Elcoin for more than 8 years. There's been a long journey. So as I said, we originally had that B2B fintech as sort of our licensed institution as we were pursuing that path. And then it emerged into us transitioning into more deeper tech layer that is now powering many brilliant fintechs and many brilliant financial services companies around.
So what Elcoin does? Let's say what would be it in 1 or 2 sentences?
So the best way to describe us is we provide core banking technology for modern financial services companies. So that would be, so if you look at the market, you would see many neobanks like Revolut, Monzo, and the list goes on. But have you ever wondered what is beneath that app? What is the engine that drives that nice looking interface? What happens actually when you press this pay button, right? So what is beneath it? So this is where things like the systems and companies like ours would stand.
And you do end to end. You do like everything. You do core banking. You do mobile app. You do everything. And especially, if I understood it well, you work in a let's say crypto niche, or generally anywhere.
We call it emerging banking products because a lot of people in the industry, again, they try to use different things. So they're not saying crypto, but they say digital assets.
Yes.
You maybe heard that, right? So they want to avoid using crypto because it has this speculative flavor, right?
Yeah. It is high risk,
craziness touch. But back to your question, generally speaking, we can solve end-to-end payment workflow from user all the way to the clearing systems, if that are the case. But again, in our view, we came across different partnerships, like where our institutional client would use their in-house team for front end, but then they outsource the underlying infrastructure to us, and then we don't know what is the right equation because this is value proposition. Perhaps app is one of their USP that they don't want to outsource or move out of, say, perimeter, let's say. But then ultimately they want to control the channel, but they don't want to control the infrastructure layer because it's a deeper investment and it's a more of a long-term game. So this is where we play around, and Yeah.
How many people reach out to? Because I work in issuer processing right now and acquire
Mm.
processing, and our company has a different vertical of acquiring actually. So, how many requests do you get now for crypto cards and crypto native neobanks? Do you feel like there's a big demand for that?
I definitely do. And I know for certain that crypto card is no longer a experiment. It is a real working product. And we have many prominent players on the market who have been issuing these cards for quite a long time. People like it because it merges the best of two worlds. So it merges this DeFi freedom, like when you can store different cryptocurrencies, but ultimately the convenience of a payment card cannot be underestimated. So you go to a convenience store, you go to, doing any online purchases. By far, the card is most frequently used method, right?
Yeah.
We have APMs, we have like other like account-to-account payments, open banking, right? But frankly speaking, card is still has very much a chunk of our payment routine.
And this is what I'm curious. Because I work in issue processing, I get tons of requests, especially for the cards. I know that nowadays, maybe you will get also more requests for also the core banking, because based on this, let's say, wave of stablecoin, etc. There are people thinking about, oh, let's build a neobank with accounts, so you can send money. But it's the main value proposition is going to be stablecoin, crypto, etc. So I don't know about that much, but I am getting tons of requests for the cards. But I remember there was I think like 4 cards many years back, 3-4 years back, where especially in UK, I think it was Ziglu. One was called Ziglu that went down. That was under. That was the first one of the pioneers that actually kind of managed to do the transition from crypto to fiat card, right? So can you explain me actually like the flow of the funds? How does it work? If or maybe step before, who is the biggest user or who can provide the crypto cards? I know, for example, exchange, right? Crypto exchange. Who else can think about providing crypto cards?
Yeah. So if you think of that from that level, so yeah, you are correct. So exchanges is a good starting point. So centralized exchanges who especially have large retail bases, right? So I mean, card and retail almost like kind of like almost the same, right? But then if you are into different use cases of a card, you may find that the crypto card is not just interesting for crypto exchanges. So essentially, what is happening is a lot of traditional finance are transforming into stable coins, into those blockchain networks, and in fact, like some of the wealth management companies are in fact considering crypto as one of their investment strategies and portfolios. So not that long ago, we had Bitcoin ETFs. So now, the banks can issue ETFs to their clients that are, backed by Bitcoins, and they mimic the behavior, the dynamics of Bitcoins. So overall, the crypto is becoming of an interesting diversified investment strategy too. Not the main, but diversified strategy, because we can see the gain of different cryptos, altcoins, or whatever. And sometimes it may be so that you would need access to those cryptocurrencies without cumbersome payment workflows. So for instance, if you have someone who is your custody, so if somebody, a broker or wealth manager or a bank who have already verified the source of your cryptocurrency, this is very good starting point to issue a card, because essentially they would know the client, they would know their real, persona or profile, so that when they are introducing cards, they don't have that boundary on the what is a source of funds and
Yeah.
where the money coming from. Because for many cases, the pinnacle of this paying is not the actual form factor, the card or the crypto itself, but it's when we try to stitch in compliance frameworks into different products. This is sometimes when the things break and the proposition collapse.
Yes, I think that's gonna be actually a topic on its own, actually, because the compliance is, I think, is the biggest pain point right now. But that's a good point. So we've got crypto exchanges, we've got this wealth. So basically, any kind of a business that is in touch with crypto, digital assets, basically. And so I didn't even realize that. So Revolut, for example, of course, they have this wealth management. You can invest into the stocks, but you can invest also into the crypto. But still, I don't think that they figure it out how to use like the crypto to pay with the card, right? So that's interesting. I didn't any other use case besides this wealth, something that I haven't thought about, or basically it.
I mean, sometimes what we can envision is sometimes where people would like to have a credit card, but not necessarily to spend the credit facility, but for instance for bookings and orders and stuff like that. So they would want to have a payment instrument that could have that credit line or credit balance available. And for many cases, in order to get a credit card, you go through the credit scoring and all of that stuff. Some people may have their assets in form of crypto. They don't want to liquefy because they have gains. They are waiting for a capital gain. They're waiting for strategies to emerge. But they are eager to use that money as a collateral to increase their credit limit. So essentially, I don't have money that I want to spend now, but I have money I can show and tell you that if there would be a need to pay, I have the money to pay. But I'm not just paying now. I'm just showing you that I can pay in the future. And sometimes when you need to book some hotels, some places, you would need to have that credit line, in order to make sure the booking is there. So that the risk is removed from, say, a restaurant or whoever is dealing with. But ultimately, as the consumer, I don't want to use my debit card for that, because that money would be withdrawn from my account. And effectively, I will be essentially crediting somebody in the future, which I also may not be even, in the end, receiving the service. So there's a disbalance, right? So I pay a service that I don't deliver or have.
Totally understand. So, for example, one of the use cases that I think is what you are saying. So I was renting a car, right? And I had to put a deposit of 2,000 euros. Like what I made, that's a lot of money for me.
It's crazy. These rentals are crazy these days. Yeah.
So this, especially imagine renting a yacht,
Oh yeah, I mean VIP travel. This is the whole other story. Absolutely, absolutely. It's very different.
But I see it. But I think nowadays the most is going to be people and companies that operate with crypto already. So I think so when I see the biggest challenge, or I see two biggest challenges, is the flow between the fiat and crypto to fiat to crypto, and the real-time exchange. So let's imagine a scenario, right? I have Coinbase, or I have Kraken or whatever, and I have their 1 Bitcoin, right? And now I'm going to a grocery store, right? Or I'm going to actually buy a car, for example, car. Or what is the flow from crypto to actually to the merchant, right? Step by step, and how And then also, if you could mention the compliance there, along the way, where's the biggest hiccup?
Yeah, I think this is like going to be quite a sort of technical walkthrough.
Yeah.
Simon, in all the honesty with you, but I tried to make it not as nerdy or geeky in the way that our audience would kind of understand. But let's just start with the cards, okay? I think that is kind of first step where we have some middle ground. So probably you know it better than I do, Simon, that the card is a four-party model. So we have the merchant, we have the card holder, so somebody who has a payment card. Then we have issuing bank who issued me that card, and then we have acquiring bank who given that ability to a merchant to accept card payments, essentially. So the four-party model. And somewhere in between there is like Visa or MasterCard, doing all that orchestration, right? Let's put it that way. Information and money and data orchestration all around those flows. So in a typical card transaction, right? So what happens? Let's consider. So I'm tapping my card to a merchant or whatever. Merchant uses my secure card details to then pass it to acquirer, so that acquirer can find my issuing bank and send the request to my issuing bank. So what happens at the issuing bank? They receive the request from the payment scheme, and they check, do I have enough balance? Do I have active card? Am I a good customer as such? So there are different checks that are done in milliseconds and then responded back to the payment scheme, yes or no, in general terms, right? So if everything is okay, the signal is then messaged across the payment scheme back to the merchant, and off we go. We have completed the transaction on the actual workflow. So we have this nice green whatever screen that the payment accepted, and the merchant gives the goods or services as prescribed. But don't get me wrong, it's just the data now that being from. So from a merchant perspective, he haven't received the real money. He has just received the acceptance from the scheme that this payment will be hitting merchant's account in some due way, in some due course, maybe 2 days, maybe 3 days, or who knows how many days, okay? Maybe same day even, sometimes it happens. But the merchant is trusting the payment scheme because obviously it was working yesterday and the day before. And so there's no means for me to not trusting it, and many people using that. So that's fine. So that trust is actually thanks to payment scheme who can actually tell, don't worry, your money will come in due course, right? And he just trusts that signal to release a good or service to that cardholder. So then this is number one, the authorization that goes, so the data. The money then flows from issuing bank across the payment scheme to the acquiring bank. And it usually happens someday, 2 days after clearing and settlement. But if you ask myself, so okay, Sergey, how that is different to crypto card? Okay.
That's what I was just thinking about, actually.
Why you keep wasting my time on this? We know that four-party model, we know of that, so why you kind of get those? So stamping changes dramatically when we step into crypto card, because what we need to distinguish is a card that is linked to your fiat account is something that the bank is controlling, and they controlling the ledger, and they know exactly how much funds you have, so they can actually change or somehow put authorization against your balance. So they have that authority. So it's almost like they are making a payment on your behalf, but you've given them this authority because you signed the card scheme agreement. So whenever you tap a card, this is enough reason to withhold your balance. So that's fun. With crypto card, it is a mixture of two worlds. We're trying to connect this card four-party model with crypto world, blockchain, decentralized. Nobody is in charge. Everybody is like everybody's there, everybody decentralized. So it's really hard topic, right? And so the other thing is that you may be knowing that, if I'm sending you the Bitcoin over the Bitcoin blockchain, it may take a lot of time to settle. So maybe, 10 minutes, 15 minutes, or an hour, which is nothing close to those milliseconds by Visa or MasterCard, the envelope, right?
Mm-hmm.
So how on earth can I change that, from say minutes of settlement to seconds and milliseconds to that card authorization? So in this, the safe approach, safe path would be issuing custody wallets. So something that centralized exchange doing, something that crypto banks are doing a lot. So they are issuing you the wallet, but they ultimately hold the keys to withdraw and make payments against that wallet. So it's a more of a trusted wallet model where you entitle your issuer or your crypto exchange or whatever to make withdrawals against your wallet.
Okay.
This is very important piece, because without that piece, you may not be able to answer a question of, have my client has enough funds to cover the card payment or not? And the second question, can I answer the first one in a time frame, right? In a very short window. So far, there have been a lot of cases where crypto cards were issued, but the important subtlety is that these were only against custodial wallets. Custodial meaning something that those institutions have provided to their clients, like wallets, etc., etc. But as you know, in blockchain, there are non-custodial wallets, something that you can do yourself, because a decentralized blockchain, right? You can issue wallet yourself, so it doesn't have to be with a crypto exchange. And the problem becomes here. Currently, it's not solved. So I wonder if the next unicorn would be in that domain, offering cards for non-custodial wallets. But one of the key for solving that problem is to build a very smart contract, right? To allow a third party to impose a charge or impose a liability against a decentralized wallet, and do it in a very short time frame. Because if you are able to do that, that's your warranty against failed card transaction.
Got it. So in a lame words, basically, for me, so I understand it, is that I have my money on a crypto exchange, and the crypto exchange will provide me a wallet. And because the crypto exchange knows that I have X amount of crypto, they will say, hey, okay, we can authorize this request because we know that it will take time to exchange it, but he has enough money there, right?
Yes.
Okay,
Yes.
okay. But how come nobody has solved it? Because I already saw that Kraken and Coinbase, and I think even Bitpanda has already cards. So what are they doing differently? And how is it working? Is it even working?
So again, the technical implementation can differ across those companies, but a typical point would be every time you're doing this card payment, what happens essentially is that at that time, the exchange will exchange your crypto into your fiat amount at the given spot rate. Now, it is very important to introduce a liquidity provider, because in a traditional card world that I explained, there was no currency exposure or risks involved to some extent. But if we are stepping from normal card to, say, crypto-backed card, we have to talk about the exposure that crypto has. So for instance, Bitcoins, they may be very volatile, right? And then if the amount of transaction is even high, then let's say normal consumer transaction, the exposure gets even higher, proportion. So for that happen is we need to introduce a liquidity provider who could exchange on the spot the funds, my crypto funds, into fiat at a preferably at a fair rate, right? Because yes, I may introduce a fee that is somewhat blend into the exchange rate to my users, but then to some extent, users can compare the service between different providers. And this is exactly where margins will diminish because the competition becomes ever so high. What is important here, however, is that you need to know that Visa and MasterCard, they would want to accept in fiat or at least stable coins that are not volatile, risky, and et cetera, et cetera. And also, the exchange rate that you applied to your customer can be different to what the exchange the Visa and MasterCard will give you sometime later. So this is where the liquidity management, the exposure management becomes critical. And traditionally, crypto exchanges were excellent at that because they would trade crypto and they would trade that with their clients, with their brokers. So they know exactly how to manage those effects or crypto risks. So this is their strong side. So in case when the crypto exchange launches a card, it doesn't have to go for a liquidity provider. It can do that service in-house. It may be lacking the card infrastructure. It can be lacking fiat licenses altogether. But one thing it has is very good FX risk management. So that is very strong point here, right?
It makes total sense, and I see exactly a couple of risks now when you mentioned that. So yes, crypto exchanges, they are doing the exchange, so they are at the source. But if there is another company that doesn't have direct access to this, that means that the risk is that I will spend my money at Tesco, 7-Eleven, but the time takes for the exchange to do the exchange, right, and process all the transactions. Actually, the price of Bitcoin can go lower, right? And then I actually saved a lot of money because the merchant didn't receive the same amount as at the moment, or there needs to be some kind of safety net, right, for this case.
Exactly. You're 100% spot on, Simon. And the thing is that there will always be something in between. Either there's a time difference between the exchange rate and the transaction. There could be some slippage. There could be some execution issues. So the crypto card is quite a subtle thing in it. So it is actually taking a lot of effort to master it because it entails a lot of moving parts. But the reward is there, and the reward is such that you're introducing a new revenue stream for your consumers to increase the volumes, the transactional volumes across your accounts. Because think of it, like you have your traders who trade the crypto. They do those what's called high frequency traders. They do like million of trades per hour, and those are not really how to say, economic in sense of it's just to trade, buy, sell, buy, sell, buy, sell. But if you have consumer users who would play around with the crypto, but then they want somehow to use it, that is a nice way of actually offloading some of that unused crypto in a convenient way. And then again, from a merchant, nothing actually changes because merchant is not interacting with crypto as such. They will still receive all their fiat from payment scheme, but essentially they are happy to accept card payments if users can afford, obviously.
I've got 50 more questions, but actually, okay. Because one challenge that I have here is, as a normal user, is taxation of the crypto, right? I remember that, if I made some profit, right, I invested a couple of years, or actually now I found out that actually sometimes even every trade, maybe that depends on the jurisdiction, every trade, when you make a profit on the investment, when you said that there's high volume traders, they would have to, report it basically. So millions of transactions, let's say. But I'm an average Joe, I don't understand it. Maybe I don't even have a business, I don't know how to file taxes because my employer has done it for me, So how does this work, right? For a person who has a normal card with a Coinbase, and he has for 10 years there 2 Bitcoins and is not doing it with them, and now is spending it with the card. How does this work?
That's a brilliant question, Simon. And I think we need to put a disclaimer here to our audience that we don't do any tax advices.
Okay. Good. Yes. That's good. I hope I will have time, and I will put it here as a title, with the star,
Yeah, at least for free, right?
Yeah. If you need, find Sergejs on LinkedIn, and he will give you some advice.
But yeah, I mean, different jurisdictions are different. So in some countries we have that notion of crypto as currency. In some countries, the notion of crypto is asset. And so if your asset price goes up to a certain point, you have what is called unrealized profit or loss. Then if you sell the asset, you obviously have the sell price. And so if there is a difference between buy price and sell price, that is subject to capital gain that you have earned from that activity. Again, it's very subtle topic as of now, especially for those high frequency traders, what they do. Because in that sense, what would be important is even if you have gain, right? Even if you have gain, important question is, what do you do with that? Right? What do you do with that gain? Do you reinvest that gain into your other crypto portfolio, or you withdraw that into your bank account, right? And how would you report that on your declarations is a totally different question, right? And again, there could be instances where you may not even report that because it would be not visible to you. Because if you are just giving your funds under management, that situation will be happening behind the scenes with the fund manager, and you only will be presented with the performance sheet and all of that. So basically, the fund manager will pay all the taxes on behalf of you with respect to your taxation. So we will not even have a choice to do that, right? But then, rightly for the crypto card, the taxation is in fact a good subtle issue, because every time we withdraw from our crypto balance, we essentially may end up with a little bit of gain with respect to where we were purchasing that. And this is quite a kind of uncharted waters for everyone, because you may argue that, hey, I'm just buying the currency at the exchange rate. I'm not making the buy sell sort of deal, because if you would just be trading, you would just buy crypto and then sell the crypto, so you have a distinct flow. But you can argue that the card transaction is something where you sell your Bitcoin to cover a certain payment operation. So you're not receiving that fiat on your account, so it is actually withdrawn. So you're not actually gaining that capital gain whatsoever, right? So again, you can argue, depending on how you kind of describe that service to your clients. But this is very good question, Simon. It's very
this is probably something that maybe lawyers could answer.
Yeah,
because exactly. I mean, from my perspective, how I understand it, I bought a new computer, I bought a food, I exchange it to the fiat, I have the money, right? And now they will tell me, okay, show me the flow of the funds, and then we will see how much you bought it, how much you were cost, blah blah blah. But when you were talking about this, actually, I thought, hey, big thing right nowadays is crypto acceptance, right? So I'm a company, and that's a different world, right? So I'm a company. I don't know, it might be a casino, it might be actually just electronics store, right? That is enabling people to pay with crypto, right? I'm receiving crypto payments, and then now because I'm talking to acquirers that wants to become issuers, right? Because they have companies that they enable them accept cryptos, and now they have the crypto in the account. They have a couple of options what to do, but why not to spend the crypto with the card, right? Paying a SaaS solution, accountancy tools, paying marketing tools, paying anything else with the card, right? And now you have a different challenge. I don't know if that's I don't know if we want to talk again about this like compliance thing, but I want to look into the perspective from the actual viability, right? So if an acquirer becomes an issuer and a merchant now has the card, does anything change? Does anything change in terms of the flow? There are still these counterparties. They are using the crypto card. Only it's a merchant, so maybe there will be different accountancy, right? Or how?
I think, Simon, that you may know that there are different types of card transactions. I think if people would from the industry may correct us if we're wrong, but in essence there is us on them, them on us, or us on us. So essentially, if we issue the card and we are acquired in the same like umbrella, it may mean that we don't even need to reach to payment schemes altogether because we have all necessary ingredients in our possession. So we know the merchant, we know this business profile that's going to be KYB profile, and we know the card holder that's going to be KYC profile. We know the two dots, we can connect them as equivalent to internal payment between two banks' customers, essentially, as simple as that. So, for instance, if your client can pay with a crypto balance, but then your merchant would not want to receive crypto on their balance, then you would have even higher revenue margin because you don't need to pay by payment schemes fees. Essentially, you do all the processing internally, so you don't need even to have a cost on that type of payments. But then, if the question is, would your merchant would like to accept crypto as a form of payment, then you don't even need to convert crypto into fiat. So you can just transfer that crypto as sort of a wallet-to-wallet or account-to-account payment. And now card could be a key for that initiation, right? It still could be the form factor, but beneath that you may want to distinguish that from other transaction types and in fact process it entirely internally, entirely in-house, and not to deal with any third parties. I mean, in sense of payment schemes.
It almost sounds like actually it's the best to be issuer and acquirer, right? And be as big. Now I think I start to understand Revolut, right? Because they did it smart. You do the transactions, you do the exchange, and then you spend it with your card when you have the fiat on your account, and you do the taxation on the other side. But interesting thing is, I had a thought, but then I had like 5 other thoughts, and I forgot the question.
It's like building ecosystem, Simon. So if we can kind of go back to this acquirer issue and the same thing, I mean, happens all the time. We're building the ecosystem. Okay, we have this four-party model, originally four-party model, becoming now three-party model, because now we don't need to communicate issuer acquirer. We are all in the single place. We become a platform layer for facilitating our clients transacting to our clients with some meaningful context. It's not just like account to account payment. I'm giving you money for anything, but it's actually a transaction whereby I have a card that I paid for a service, so this is linked to my payment protection.
Yeah.
But then the merchant sees the payment delivery, which is going to be instant, because there's no, there's no money flows with third parties. And so you would have a win-win situation, because a merchant would not need to wait for that funds. They could buy more products even faster, so they can increase their turnaround.
That's in the ideal world, in the dream world,
Yes,
where everybody is using a Revolut, and that's it, right? There is no other bank than Revolut. Because
well, we would be out of the market then.
But yeah, so you know what, that's the point, right? That actually raises an interesting question, which is basically, what about the schemes, right? Because this, I think, is something that schemes are kind of afraid, especially nowadays with the stablecoin. I still don't understand it that much, but the stablecoin, I feel like, so it's super fast, it's not volatile for cross-border transactions. It's really good, and also could be really good for this card transactions, right? And then you cut the big middleman, which is a lot of money.
I mean, I was reading some of the brilliant posts on the LinkedIn, and very smart people, more clever than I am, and they put it in a way that stablecoin, right, is nothing but a programmable settlement layer. Let me unwind it a little bit. So blockchain is by default programmable. It has absolutely not great UI UX, because those wallets are just gigantic. Nobody can ever remember these things. But on the settlement, stablecoin is actually, it will have all the features of a fiat currency, like US dollars or euro, for instance. So it will not be as wobble as crypto, for instance. So that is very important for settlements. If you settle, not 500 euros, but if you say settle 500 millions, you don't have to, worry much about volatility. It will be stay as is. So it's very important for settlements to be stable. It's like their key attribute. But what happens next, if you compare that, and essentially almost like 90% of stable coins are actually US dollar stable coins in circulation, you giving that instrument, you giving that convenience, but you're not removing the dollarization from the equation. So you still have, the channel is different, but you're not removing the dollarization, the global macroeconomics here from the equation. It's still there. What you're improving the speed, you're improving execution, you're improving transparency, and you allowing a faster access in comparison to traditional bank accounts, right? Traditional dollar accounts, for instance. So everybody can access stable coins, but they don't have to worry much about now of the volatility. So it's more about delivery of the US dollar rather than rather than something entirely new, right? So it's a programmable settlement layer. That's
I love it. I love it. Honestly, Sergejs, you managed to explain me things that I were not understanding for years, and I was not able to understand it for 2-3 years, reading about it almost daily. It was a really great conversation. I think we need to do a part 2, because there was so many topics untied, so much unexplored area. But honestly, I really feel like I'm a little bit closer. If not, I feel like I almost understand what is the stablecoin, what is the use case of how does the payment flow works, and if I'm the guy, if I'm the right company to actually start issuing the card. So honestly, I have learned a lot, Sergejs. Thank you very much. Thank you for your time. Any final remarks?
I mean, for people out there who trying new things, don't let your mistakes or poor results stop you. Just keep trying until you build something fucking amazing. That's what my suggestion would be.
Love it.
You
Amen
know,
to
don't
that.
drop hands. Keep on
Amen
building the
to
new
that.
era of products. Yeah.
Maybe you will build the next Revolut. Hopefully.
I mean, who knows?
Who knows? Sergejs, thank you very much. Pleasure to meet you. Pleasure to have you here. We will be in touch. And that's it. Thank you very much.
Super. Thank you, Simon, for having me today. Thank you much for the audience. I hope you enjoyed our little nerdy chat about fintech and neobanks. But I'm happy to join the part two in the future. Thank you so much.
Definitely.
Yes.
Have a good day.
Bye. Bye.